Hello, my name is James Tansey. I'm the CEO of Klimat X Developments. I'm here to tell you a bit about our company and some of the great news we've been able to share in the last few weeks. Our company is focused on large-scale nature-based solutions as a way of tackling climate change. We believe that this is one of the ways that through investment we can make a big difference to global emissions. We can do it quickly and we can do it effectively. We can also generate very significant community and regional economic development benefits in the countries where we're active. So we're very much focused on what we call nature-based solutions. These are projects that invest in reforestation, conservation and protection of forest lands, but also restoration and protection of mangrove ecosystems along the coastline of the countries where we're working. We know that the demand for carbon credits is continuing to grow. We've seen projections that suggest that the market will reach a size of $30 billion by the year 2030. That's work by McKinsey. It's also work by Mark Carney's Task Force on Voluntary Carbon Markets. We're focused on being an upstream developer and owner and operator of these projects in the nature-based solution space. To date, we've secured over 44 million tons of projects. We have many more projects in the pipeline. And the cumulative revenues from those projects represent close to $2 billion. We'll show you some of the financial details of that project as we go through this. We have very strong relationships on the ground in places like Sierra Leone and in Mexico, in Guyana, Suriname, and countries like Pakistan, where we're developing new project pipelines. And ultimately, what we've done is taken a resource sector-based approach to the development of this new commodity of carbon credits and taken lessons from the contract structures that the mining and resource sector use, the approaches to financing, but steer those towards positive climate outcomes, towards investment ultimately could reduce emissions dramatically on a global basis. We have an incredibly strong board that's a privilege to serve alongside Paul Matizek, with a background in the resource sector, in the lithium sector, and recently recognized as one of the leaders in the resource sector in Canada. Abayomi Akinjide, who's one of the most senior resource sector lawyers based out of the UK, focused on projects in Africa and also around the world. Celia Francis, who joined us a year ago as an advisor and stepped up to the board, who's now a senior member of the leadership team, guiding the direction of the company. Neil Passmore, CEO of Hanneman Partners, and the guy who's brought in our projects in Suriname and Guyana and leads on a lot of the work on our financing. And then Bob Cross, who also has decades of experience in the resource sector and recognized as a leader. Four of us representing the leadership team come from a diverse range of backgrounds, all with lots of operational experience. Myself, probably the greatest depth of experience in carbon markets, beginning in early 2000s, in 2006 with the establishment of a company called Offsetters that developed the Great Bear Rainforest Project, worked to make the Olympics carbon neutral for the first time, and developed some of the largest projects in the world in that first iteration of carbon markets. Kev has incredible experience, 15 years experience on the ground in Sierra Leone and in West Africa. Neil also has decades of experience developing projects in the agroforestry and resource sector space. Matt joined us last year as a seasoned CFO to support the governance and direction of the company. The key variable here that's driving interest in carbon markets is growth and demand from the voluntary sector, from companies that have made net zero commitments and now need to find the carbon credits to meet those obligations. Now, every company can make some small changes, some reductions in their emissions, reducing air travel, introducing energy efficiency initiatives. But ultimately, to meet net zero, they're going to have to buy carbon credits or invest in carbon credits. And the scale of this demand is now unprecedented. You can see from GFANZ, which is the umbrella organization that Mark Carney helped to set up, Net Zero Asset Managers Initiative represents $68 trillion of assets under management. So this is what's driving this massive increase in demand for carbon credits, and the expectation that will grow at least 15-fold by the year 2030. More importantly, in some ways, as we'll see from some of these graphics, there's strong evidence that preventing and reversing deforestation could reduce emissions by between 25 and 40%. And our position is mobilizing capital through these kinds of projects is one of the most effective ways of tackling climate change in the short run. It doesn't replace the need for emissions reductions in the long run, but within a decade, we can have a massive impact on the rates of deforestation globally. We focus on nature-based solutions for a couple of very simple reasons. This graphic across the bottom shows 8 to 12 billion tons of carbon credit potential as identified in in the report for the Task Force on Voluntary Carbon Markets. 65 to 85% of those credits could come from emissions reductions related to avoided deforestation, conservation, what we call broadly nature-based solutions. So we focus on this area because they're the most scalable, they're the largest portion of the market, and they're also, in many cases, the lowest cost emissions reduction. So if we have limited capital to spend on emissions reductions, we should be spending it on the lowest cost areas. And that doesn't mean that there aren't important technology investments in the future, but we believe, for this first decade, that we should be directing as much capital as possible into preventing and reversing deforestation and land degradation. Remembering as well that 20% of global emissions now come from deforestation and land degradation. So we see the problem in the market as being that there's a huge potential supply of credits there, but the current organization of the market doesn't support large-scale investment. It's a supply-constrained market. It's an artisanal business at the moment, the carbon credit industry. It's an order of magnitude at least too small to deliver the kind of demand that we're seeing. Production is underdeveloped. It's still very much bottom-up, small-scale projects that the groups try to aggregate. And we believe there's an opportunity to bring the best practices from the industrial resource sector to what's an artisanal and cottage industry and use those mechanisms to scale the business up. So our solution is focused primarily on nature-based solutions that produce the lowest cost-based projects with the highest quality and the highest volumes. We focus on highly productive tropical jurisdictions. Typically, a tropical forest absorbs 3 times as much carbon as a temperate forest. So we believe we should be focusing in areas where nature's solutions to carbon absorption already grow the fastest. We have a company led by people with resource sector and carbon experience, which we believe is unusual. And we, from the beginning, focused on these jurisdictional scale projects where we engage with governments, we secure the rights to develop projects, we secure ownership in them, and ultimately then seek to deploy capital into the development and growth of those projects. Some of the precedent transactions we might point to, both private company transactions, whereas we're a public company, but Delta Blue Carbon was a very large-scale initiative related to mangrove restoration in Pakistan. Wildlife Works has received a significant investment or line of credit from Hartree to invest into largely avoided deforestation carbon credit projects on a very large scale. Wildlife Works is a private player, one of the largest conservation-based project finance companies and carbon credit developers in the world. So our jurisdictional approach involves establishing agreements with national or subnational governments, effectively ensuring access to the rights to the land, to getting title, to getting some form of endorsement by government prior to developing projects. We've seen problems around the world where companies have advanced projects without securing government consent and engagement and had those rights taken away or had those rights frozen, as we've seen in Indonesia in the last year or so. So we focus very much on government as a partner, about being explicit and clear with respect to their revenue sharing opportunities, but also focusing on community engagement, free, prior, informed consent, and ensuring that our projects help to meet the SDGs as part of the project implementation. Because if you don't remove the drivers of deforestation, which are obviously often related to poverty, if you don't remove those drivers through economic development, then it's very difficult to secure these lands in the long term. So nature-based carbon company, we focus on securing 40 to 100% ownership in the assets that we work on. We want to be an owner-operator, we want to manage risk, we want to control the projects, and then we want to pre-sell these projects downstream to large final emitters or buyers or traders. So we do the de-risking work, and much as you might have a pre-purchase agreement on project finance and renewable energy, we're trying to do the same thing in carbon credits. We like to look at projects that are at least 500,000 tons per year of project potential. We look at reforestation, avoided deforestation, mangrove projects. We've even looked at things like seagrass and seaweed. We work with Vera, which is the established carbon credit registry, the most widely used in the world. We tend to focus on tropical countries just because we add the most value there and the growth rates are the fastest. And we have a highly experienced team in the field. The economics of these projects are really important to understand. Our approach is to use our equity to de-risk projects to the stage where either a buyer can fund the balance of the capex through pre-purchase arrangements, or we can establish offtakes that allow us to access low-cost debt and finance. Currently, the market is so short on supply of credits, we're finding it relatively easy to manage and negotiate these pre-purchase agreements. So in simple terms, we may be spending $1 million doing site development, at-risk exploration, quantifying what the reserves look like, getting to the stage where there's a draft project document that captures land title and ownership and all of the underlying carbon dynamics of the projects. Those are then validated by a third party, but at that stage, we can pre-sell those projects to large buyers. And those pre-purchase agreements are what fund a lot of the capex on these projects. That's been our model. It's a pretty unique approach within the market, but we're definitely finding an appetite for it. So in the context of Sierra Leone, which is our most recent announcement, we spent roughly $2 million on the project development work, on securing the leases, on developing the documentation. The pre-purchase agreement will fund the majority of the remaining capex for the first 5,000 hectares of that land, with an option to invest up to 25,000 hectares. So for $2 million of initial investment, we may see between $400 and $500 million of revenue flow through the company. And that's part of the beauty of very efficient capital allocation model. These are our current projects. In Sierra Leone, we have 25,000 hectares initially under development, with a further 32,000 hectares available for the next phase, already with permission from the chieftains and from landowners, so we're able to move very quickly on this project. Within Sierra Leone as well, we've identified mangrove areas where we can either conserve existing mangrove areas or restore areas that have been degraded. And then in Yucatan, we have an agreement with the state government to protect up to 100,000 hectares of land that would effectively fall into a park area, and then restore 25,000 hectares of mangrove by restoring hydrology, by restoring tidal flows. We're unique, we believe, in this space as a public company because we're an owner-operator. We work upstream, we deploy capital at scale, and we sell directly to wholesale buyers. There are a number of streaming companies out there that have tried to intervene within the market with mixed success. What we found is the large buyers want to be able to buy directly from the developers of the projects and have real oversight in terms of the quality control of the projects. So we've had a lot of success by going directly from the upstream sourcing and development of projects through to wholesale agreements. Our Sierra Leone term sheet, which we closed the process for, officially announced just this week, is a pre-purchase agreement with a term sheet in place with a Fortune 100 company, subject to final approval and documentation, which we expect to happen within the next few weeks. It's up to a 20-year offtake agreement combined with a pre-purchase that will fund most of the balance of the capital expenditures to do the tree planting within that project. So a unique model, one that starts with 5,000 hectares and is scalable to 25,000, and I think is going to sort of define the kind of framework that companies use now for funding, for doing carbon finance. Just sharing briefly here the assumptions behind the model, the caveats associated with it. We've used Ecosecurities and Sylvester and Climate Associates to do a lot of the work, technical work alongside our team. And then we've evaluated the projects on low, medium, and high pricing scenarios, ranging from $15 to $20 to $30 a ton. And we expect to see strong growth in carbon pricing, many indications that pricing will hit $30 a ton by 2030. Our first Sierra Leone project is a 50-year project covering 25,000 hectares, restoring land with native rainforest, effectively planting 7 initial species. Once those species are established, they provide a cornerstone for a lot of redevelopment within the area. We provide 2,000 jobs as part of the planting process, generate almost 16 million tons of credits, and cumulative carbon revenues of about $760 million US over the lifespan of the project. Project IRR of 16%. Project NPV seems low because we're using a relatively high discount rate. Really, the way to think about these projects is not just the NPV, it's the IRR, it's also the capital efficiency model. So $2 million invested into this project translates into close to $470 million of revenue to the company. So we think this is a very attractive model from an investment perspective. Second project, very similar model, replanting wild species that we harvest, put into seed banks, put into nurseries and grow, and then plant the following year, providing lots of employment within the regions. This is a separate area of 32,000 hectares, generating almost 20 million tons of credits over the project lifespan. The mangrove restoration and conservation projects are in the Scarcey estuary on the coast. These are areas that have been degraded by agricultural activity, by people harvesting mangroves for firewood. And in this case, there's large areas that we want to restore and then remaining areas we want to conserve. In the last 6 months, we've mapped most of these areas, and we planted 15 hectares of mangroves to see how quickly things grow and propagate within that area. And we've also established a large nursery so we can complete more planting later in 2023. So we have the potential to scale this up, not just to 10,000 hectares, but to 30 to 50,000 hectares of land. And then within Yucatan, a really unique project in an area along the coastline that's been modified by road construction and home construction that starves the mangrove areas of salt water, so that the salinity levels become too high and the mangroves die back. We believe we can restore these areas by restoring tidal flows, by planting, by channeling more fresh water into the areas. Very large-scale project as well, developed in conjunction both with the state of Yucatan and also with the federal government of Mexico. We also own an agroforestry project in Guyana as a foundation for our projects in that country. This provides sustainably sourced coconut water as well as restoring degraded areas of coconut plantation. There's a carbon component to this project, but we also see this as our regional headquarters for developing other carbon projects related to mangroves in Guyana and then also in places like Suriname, the neighboring country. But this is a fully invested project. The coconut plantations are growing quickly. They're on track now. We expect to see about $112 million of cumulative revenue over that project lifespan, a very attractive project IRR. And we feel very comfortable investing in other commodities alongside carbon that generate parallel revenues to the revenues we generate from carbon credit sales. Suriname mangrove project restoration, we're in the final stages of negotiation, looking at the entire coastline of Suriname, which is at threat from sea level rise and degradation. We have some indicative numbers here in terms of the scale of this project, but we'll be able to say more about it shortly. Capital structure, we're listed on the TSXV. We listed last July. We have a tightly held company with close to 60% of the shares held by founders and the management team, 87 million shares outstanding, and a limited pool of options and warrants. No warrant overhang, what we believe is a pretty clean and tight structure for this. So very much look forward to hearing from you, hearing more about your interest in the project, and to hopefully keeping you updated on our progress. Thank you.